Well, distinguished panelists, ladies and gentlemen, it is my great pleasure to welcome you to this session on economic governance in Europe. Allow me to kick off with a quote from Jean Monnet, who once stated, "Nothing is possible without man, nothing is lasting without institutions." I think these few words perfectly capture our subject today. There can be no doubt that the financial crisis presents the European Union with tremendous challenges in this respect. Just a few questions we would like to deal with today. Is the governance structure of the EU suited for times like this, when speedy action is required? Is this structure stable and strong enough to effectively align divergent national interests? Will the huge rescue packages launched at both EU and national levels prove effective and reinforce each other? Can Europe take a leading role in reforming global governance? Or how will the new balance between market and state that this crisis will bring impact the EU and particularly its governance? These are some of the questions, of course, we will discuss in this panel. We are extremely fortunate to have assembled an impressive group of participants from both EU institutions and member states to look at these issues. So without further ado, let me put the first question to President Barroso. Mr. President, building on the words I quoted from Jean Monnet earlier, sound economic governance requires strong institutions. Are the institutional arrangements in the EU up to the task, in particular when it comes to ensuring financial stability? Or based on the experiences in the last few quarters, what additional arrangements are desirable?
Yes. Good afternoon to everybody. In fact, I think we can always improve our model, but the European Union is already now, by far, the most advanced example of cross-border economic governance. We can improve, but we have very strong institutions. The European Commission is a very strong institution that established its reputation for 50 years. In fact, Jean Monnet was the founder of our institution. He was the president of the institution before the Commission, the High Authority for Steel and Coal. We have the European Central Bank, whose reputation is already well established, even if it only has 10 years. And so we have strong institutions. We are now discussing also some other arrangements, namely in terms of supervision. This is work in progress. In fact, I have just established an independent group chaired by Jacques Larosière that is going to present this month of February, this next month of February, a report, and I expect to present to the European Council in March some ideas. But let's face it, in this crisis so far, the European Union reacted very positively. It was possible to have a quick response to the problems of the banks, namely recapitalization, guarantees, in a very short period. It was possible to come following a proposal of the European Commission, a European Economic Recovery Plan that was endorsed by all member states. And globally, it was the European Union who took the leadership. In fact, it was the European Union, President Sarkozy, it was the President in Office of the Council, myself. We went to the United States to speak with President Bush to convene this global summit, the G20, and now we are going on with that exercise. It will be the 2nd of April in London. So I think the European Union took the lead in these efforts for global governance, and I believe that we are in a very good position to do it, because if there is someone in the world that has experience of cross-border rules, cross-border regulation, cross-border legal and economic work, it's precisely the European Union today, has not only the countries of the euro area, but 27 member states. It has the same currency for 16 member states, and it has the internal market. The Commission is responsible for the enforcement of the rules in the internal market, namely competition, state aid rules, and so I think we have good tools. But, of course, as you know, we are in Lisbon. Also, in the Lisbon Treaty, we are trying to have more coherence in the decision-making process to make it easier, because at 27 member states, it is desirable that we have less decisions taken by unanimity, more majority decision-making. But by and large, I think we should be proud of the response that so far we have been able to give in such different difficult circumstances and in unprecedented circumstances.
Thank you. Prime Minister Reinfeldt, the economic and financial crisis is likely to alter member states' views on which policy areas should be dealt with at the European level and which ones probably at the national level. Can you elaborate a little bit on that, where you see the task allocated to the national level or the European level, maybe also from a Swedish perspective?
Absolutely. Thank you very much. Well, I think it's very clear that the global financial system cannot be dealt by national regulation. Therefore, we need a global response. We need a very active European Union. And we learned and we saw that the European Union were capable of doing this during the autumn. But then again, it needs to be the right kind of regulations, not too many. I think it's better if there are few, but really making the job rather than diffusing the market signals. If that's in place, then it's easier inside the nation state to do our job, to put up national programs to be able to get capital into banks in trouble, and also the discussion on how these guarantees should look, because they are very much alike, but they are still they are done on a nation base. Why? Well, because the banking systems are different between the different countries. In Denmark we have a lot of banks, in Sweden we have just a few, and of course this we also have to reflect when we go further on. But the coordination inside Europe, the coordination globally is very important to be able to do the job. Then, of course, we need to look into employment things. We have to be very careful with the budget, of course. That's the worry I now have. All through the autumn there was a lot of call for all of these stimuli packages, and we have also have had two such stimuli packages, but of course we had a surplus when we started in our budget. If this is too hard pushed, I think we will get new unbalances in Europe and in the world, where we actually will have such a high degree of deficits that this need to be addressed. That's what we learned in the early 90s, that alongside with the banking crisis we also got a huge deficit in our budget, and it's a long way home again to get back to a surplus on the budget, and that should be remembered when everyone calls for an extra stimuli package.
Can you maybe elaborate a little bit on what we now call the Swedish model in solving a banking crisis? I mean, you created part of a bad bank, which is being discussed now in many parts of the world. Yeah,
exactly. We had a very hard-hit banking crisis in the early 90s, also in Finland, but it was very clear in Sweden. Nearly all our banks were in a state of bankruptcy. So, of course, we had to address this, and we learned that you need to separate the bad credits from the good credits. You need to make facilities where you could push in more money into the bank so it can get more capital and, of course, address all the ones who want to lend money. These were the important parts. Also, political remembrance from this. I don't know how it is in all our other countries, but I can say that not all my voters are in love with the banking system in Sweden and the different banks. That's something you learn. If you just act as if you had to solve the bank's problems, take away their problems, lift off the risk and give them money, you might get happy banks, but you won't be re-elected. And that's a lesson also to remember. People will get angry if you only look at the interest of the banking system. You also need to say that if we are on the downside helping you, we want to be on the upside. Therefore, we got in as part owners in the banking system, but with a clear exit strategy, saying we are not long-term owners of banks, but we want to be on the upside and then go out of the bank, which actually made it possible for us to say after a couple of years that no, we didn't use any of the taxpayers' money to save the banks, and I think that was an important message.
Thank you. Mr. Trichet, I think you have been applauded for doing a fantastic job during the crisis as the head of the European Central Bank. You have been somewhat more explicit recently about supervision, but also about other improvements in the processes and institutions. Can you elaborate a little bit what you think should be done in Europe and then maybe also on a global scale in order to become more resilient to shocks in the future?
First of all, I would very much echo what said President Barroso, because it seems to me that we have solid institutions which helped a lot, obviously, and it's true when you look at what has been done by the European as a whole, including the decision taken by government, it seems to me that it has functioned, even in very, very demanding circumstances, and through the complex decision-making process of Europe, both at the level of the institutions of Europe and at the level of individual governments, the decisions that were needed were taken. So, of course, we have to remain extraordinarily alert, and nothing is definitively gained, but this is something which I would very much echo. Let me say that as regards, on top of the institution, you have the concepts, and I will echo also what was just said by the Prime Minister on the exit strategy. We have always said that as regards, for instance, the fiscal policies, it was very important to respect, and we concurred very much with the Commission on that, to respect the Stability and Growth Pact, all the room for maneuver that exists in the Pact, but I would say also nothing but the room for maneuver, because, again, you have, if you want to get out of this difficulty, you have not only to solve immediate problems, but you have also to preserve or improve confidence in the medium-long term. So you have to demonstrate that you have a sustainable path and that in the medium and long term you are in a sustainable position. It's certainly true for the fiscal policy. It's also true for what we consider part of the very good management which is necessary in Europe, the Lisbon strategy that, again, President Barroso mentioned, which for us is absolutely key. And I would say that the very demanding period we are now facing with calls even more for the structural reforms that would pave the way for a much better long-term future. And of course, we are especially keen ourselves on the monitoring and on the Council exerting peer surveillance on the competitive indicators within the euro area in particular. All that being said, as President Barroso said, meditation, reflection, discussions are taking place on possible improvements in the surveillance of the banking industry in particular, financial services in general, and we have no position of the Governing Council of the ECB, so I'm prudent and cautious, but we have noted, of course, that there was, at the moment of the negotiation of the Maastricht Treaty, this idea that we could play a role ourselves. And we have always said that we thought that it was necessary to establish a close link between the central bank and the banking surveillance authority, and it seems to me that all what has been observed in a recent period of time has confirmed that this close link was probably a very important element for the resilience of the system. That being said, I will conclude on that. You asked us to be very concise. I will only say that, of course, good governance in Europe is important, but what we need is to improve very, very substantially the resilience of the global finance and of the global economy, and that calls for absolutely global concepts. And we trust that it is what is being done with a very active participation of the European at the level of governments, and I have to say also with our friends of the other central banks, we are in a very, very close and intimate cooperation.
You mentioned also regulations. Now it seems to be that the financial markets are almost demanding more than regulators. Talk about capital ratios which are still at 4% minimum. The financial markets are actually requiring banks to have much more capital. How to deal with that? Should regulators be more outspoken about their own targets in order to calm markets, or should they increase capital requirements in a speedy way? What is your response to that?
No, I think you're absolutely right, and we have a spontaneous behavior of market participants that are very pro-cyclical, that are playing against what we would consider appropriate, namely to be as anti-cyclical as possible. So this pressure, this call from the market to augment the capital requirements doesn't seem to us appropriate at all. And we will very, very clearly say that we consider that the previous capital requirements are good. We would not, certainly not in the present period, augment this capital requirement. We trust that what the market is suggesting is not appropriate. The market was ignoring the risks 2 years ago, dramatically, as we know, and perhaps in some cases is pushing much too violently in the direction of procyclicality. So it's up to us, and we are discussing that, of course, in the Basel Committee at a global level and amongst the surveillance authority. That does not say that it is not legitimate in some cases to have buffers for possible future difficulty, and that should not be interpreted in an augmentation of the capital requirement. And again, your question is extremely pertinent. It's a very important. We are not fully in agreement with the market spontaneous reaction.
Can you? I might be interested for many people in the audience. Could you say a few words about how you see the credit crunch challenge, especially in Europe, in the Eurozone? I mean, you hear different views and different statements from politicians, from some business people as well. Bankers, of course, have in many countries a somewhat different view. What is the truth here?
No, I would say that, as you say, we are not in the same situation, and we have to be very cautious to look at individual cases, individual banking system. And I have echoes that are not alike at all within Europe and certainly at a global level. But it is absolutely clear that the pressure of the market participants and the fact that the decision we have been taking at the level of central banks and governments are very recent, obviously. I mean, these decisions have not been totally, in my opinion, priced in fully by the banking sector in general, and also by the non-financial corporate that are also playing a decisive role in putting back on its feet the global economy and the European economy, because they have considerably shrunk the horizon of their own investment. And you know that better than anybody. And we have to get back to a normal behavior, because I would say a lot of the difficulty of the financial sphere now are also coming from the non-financial sphere, which has totally different attitude in comparison with what we had before. We are asking all, I would say, authorities, whether private or public, to be up to their responsibility, and it is what we try to do. We have taken extraordinary decisions, obviously. Fancy that we are refinancing all commercial banks in Europe on an unlimited basis for 1 week, 1 month, 3 months, and 6 months. Before the intensification of the crisis in September, October, we would never have imagined that we could take such decisions. So what we are doing is extraordinary, and we try to help. But the situation is different from a country-to-country basis, but remains tense. That's absolutely clear.
Minister Tremonti, it seems to be quite a challenging task to strike the right balance between stronger and smaller and weaker and countries in Europe, and probably there are different national interests. Is that something which requires some changes in order to safeguard the somewhat better balance maybe between member states' interests? How do you see that from Italian point of view, including, of course, the fact that now yields on government bonds are so different in certain countries, and CDS spreads have widened dramatically in some countries compared to others. What would you think should be done in order to have a somewhat common approach to these difficulties in Europe?
Thank you very much, Mr. President, for this opportunity. 1 day holiday, being treasurer in this period is fantastic. Anyway, the title of this session is Economic Governance of Europe. I try to change, not speaking of economic governance of Europe, but the opposite, governance of the economy in Europe. The past, the present, the future. The past. During the old happy time, the system was working, not so bad. The system was based on a communitarian model and at that time was efficient, and now we understand. The present situation, under the stress caused by the crisis, the balance of power is shifting from the old communitarian method to something more played by governments. And it is logic. More state in the economy means more government. And the system, my feeling is, in the present situation, the method is efficient. Not enough looking at the future. We are a continent, we have a market, we have a currency. Now, my feeling is, I'm not speaking of economic issue, I'm speaking of a political issue, coming back to the laws, to Hamilton in America. Now we need a union bond. This could be the right solution.
Thank you. President Barroso, from a more strategic point of view, I think the crisis has certainly affected the balance between state and market. Yeah. And I think we see much more national interests. And I understand that, because if taxpayers own pieces of a bank, they want that they lend probably domestically more than internationally. Do you think that will have repercussion on Europe or maybe even on the world, and that this could require some changes in the EU governance structures?
Look, I really believe that the present trends will increase the European dimension, not decrease it. Because the globalization is the most important driver for European integration. It's quite obvious that in face of these huge challenges, even the biggest member states cannot respond to them alone. Not only the financial and economic crisis, climate change, energy security, I could mention many other references. So in fact, what I see is a trend for more coordinated European action. It's true that in this financial crisis, we are seeing more, let's say, appeals to an intervention of the state, but at the same time, we are seeing movements for global governance. The G20 summit in Washington was indeed very important, and I personally believe that the G20 will probably consolidate. And Europe and European member states have a choice. Are we going to try to shape this globalization, or we are going to be irrelevant? This is the real question. It's obvious that the medium-sized and smaller member states, they will not have means to influence. And even the biggest member states of Europe alone, they will not have that capacity. But together, acting together, the European Union, we are the biggest economy in the world. The aggregate economy of Europe is bigger than the United States. In trade terms, it's by far the biggest power. And we could go on and on. So I really believe that this globalization is a trend, a driver for a more European perspective. And so I hope that with, of course, the commitment of the different governments, with the European institutions as well, working hand in hand, respecting, of course, this European dimension. Look, European Central Bank is indeed an independent institution, a supranational institution. The role of the European Central Bank was reinforced or weakened during this crisis. It was clearly reinforced. So I'm not at all convinced that we are going to have a trend towards more, let's say, national action. What I believe is that we have to find a new balance, of course, so that the European Union the member states can best defend their national interests. Now I'm speaking also as a former Prime Minister. I expect all the Prime Ministers to defend their national interests, but to do it in a cooperative European way, and I really believe that this is the way, if we want not just to suffer from globalization, but also to give our contribution to it, working with our American friends and others. Having this global approach, it's quite evident this crisis is the first crisis of globalization age. It's completely unprecedented in many of its aspects. We are all in the same boat. At the beginning, many people thought it was only the Americans. Afterwards, they thought, oh, maybe the Americans and the Europeans. Now we are seeing the emergent economies also feeling the consequences, because when there is a sharp decline in demand in the United States and Europe, the emerging markets are suffering. Also, global investor confidence is suffering. So we need this global approach, and I think that together at European level, we are in much better situation to defend also the national interest and, of course, above all, the interests of our citizens. Ultimately, that's what all political leaders should do, is to defend the interests of our citizens.
If you go through the different countries and the health of the banking system, it is actually astonishing that those countries where you have a profitable, strong domestic business have been less forced, of course, to assume exposures into the subprime or whatever market. Would that as a consequence mean that we should have a more integrated financial market, even more so with consolidation in Europe, in order to be less dependent on domestic structures, which some are very fragmented markets?
One thing it is clear is that the national supervision system did not work properly. That was obvious. And one thing is also clear. In Europe, and you know that very well, we have banks that are European by nature. They are operating in several markets. So I think it makes sense to have a more coordinated approach at European level. Now, what is the level of coordination? Should it be a new institution? Should it be related to the European Central Bank? Should it be some combination of a central structure with the national supervisory authorities? That's what we are now working. This is work in progress. One thing from my point of view is sure. We need also to have some oversight at European level so that we can look at what the activities of the financial institutions that have cross-border activities in Europe, and they are very relevant, and this crisis has shown. When we have the first problems in some of our banks, in some of our member states, we have seen clearly that impact was felt not only in the countries themselves, where the headquarters of those banks were, but in many other markets around Europe. So it makes sense to have a more coordinated approach to supervision, but we have to look exactly at what is the best way to deal with this issue.
Prime Minister Reinfeldt, Sweden, I think, looking into the second half of this year, will assume the presidency of the EU. Anything you hope to achieve on economic and financial issues during your presidency you can already elaborate on now?
Well, it's a very interesting presidency, since we will be the presidency in between two parliaments, in between two commissions, in between two treaties. So everything is happening this autumn, and of course this will affect Europe a lot. We will have a lot of discussions, especially on the way to getting over to the Lisbon Treaty. But alongside with this, I think we will see, well, first a deepening of the crisis throughout this year, affecting employment, affecting the economy in the different European countries. And I agree that we will have a lot of discussions on coordination, on supervision of financial markets. I would like to add, because that was also the experience in Sweden, since there's a lot of lack of confidence and a lot of rumors in the market, it is also very good to open with measures that is more transparent, that you are more open to see what actually is behind the different figures. When you don't have that openness, there is a tendency to go more to rumors, and then you lose a lot of the confidence. So that is a part I definitely would like to add. Then also, of course, we will see this global discussion, the G20 process, also to continue probably into the autumn. I think it's one. President Barroso mentioned the word together. I think it's very important, coming from a medium-sized country, that it's not just a few sitting out there trying to formulate the way forward for the world. We've seen that before. That's not the answer. There you will get a lot of nervous reactions from countries, from prime ministers, from politicians, credible to their voters, who would like to say that I also had a say, because I'm the one responsible for what will actually happen in our economy. That's why we have said that the Bretton Woods institutions is interesting to look at, because they give a place for everyone. But it could also be an opening, of course, in G20 process if it's very coordinated inside Europe. And, of course, that falls heavily on a presidency to do that ongoing. Why is this important? I come back to this. Well, because we have such differences still in our banking sectors, in our systems, in the way our industry is built up. And I know one thing, that a crisis in a bank in one part of Europe is not immediately what everyone would like to finance in other countries from their taxpayers. So yes, coordination, but don't think that everyone would like to take the responsibility for everyone's problems. And in that sense, we are still nation states, still responsible very much for the way the problems will show in our own countries. And I think that will not change in the short term.
I would like to come back to your last point with Jean-Claude Trichet, but first, Minister Tremonti, you will also chair, or Italy, the G8 this year. What is your view on how important is the G8 in the sense of reviving global growth, and what will be some of the agenda points you are going to push when you are chairing this conference?
G8 or more and G20. G8 is honestly too small. G20 is honestly asymmetric because of the absence of Africa or the Arabian world. Anyway, our plan is to cooperate with the G20. We understand the political sense of the G20, and so no competition, cooperation. Our proposals on the economic area are mainly two. One is a new icon, legal standard. The other one is D-tax or A-tax, legal standard. Our feeling is crisis is global because the origin of the crisis is in globalization. Too fast and too leveraged. Too much debt. And this is the geography where derives the present financial chaos. This anarchic situation derives from the new geography of the world. Our feeling and our proposal is if you are looking for the way out, if you looking for the recovery, our feeling is the solution, what's necessary is not more capital, but more regulation. So a new set of laws. We are preparing some drafts with the OECD, and when we are speaking of legal standard, we are not speaking only of financial regulation, we are speaking of instruments of capitalism, and we are looking for the definition of which kind of cooperation, which kind of contracts, and anti-bribery and transparency and fiscal haven, tax havens, and other issues. We are working with the OECD on this direction. Our feeling is what's necessary is more regulation. But coming back from this anarchic and unsustainable situation. So we are trying to working the rebuilding of the old glorious capitalistic system. The other proposal is the tax, and it's a system financing mainly Africa or poor countries, based on, obviously, we understand the old system based on governments working, it's good, but we are working, we are trying to plan with some authorities all around the world. The flow can be organized or based also inside the network of NGO. But next Davos could be good for a control on the evolution of these proposals.
Thank you, Jean-Claude. The structures in banking are different from country to country. Some, especially in emerging economies in Latin America, but also in Eastern Europe, have a banking system which is in foreign hands by 50 or 80%. Some banks are very big in terms of assets to GDP. The former chairman of the Fed recently said banks have to get smaller again so they can fail, and we have an exit strategy for weaker banks without jeopardizing the entire system because of the interconnectedness which we have seen in the Lehman case, in other cases. Is that a concern for you or the ECB in terms of financial stability, and do you have some proposal to make in that context?
Well, on the very precise question, I think you have a very important point, and it was mentioned by the Prime Minister a moment ago also that to the extent that you have to go to taxpayers, then of course you have to listen to what they say and think, and then of course there is a temptation to reconcentrate on your own domestic market when the prosperity of the world. We should not forget that the prosperity of the world has very, very largely, of course, relied upon this globalization. So I would say what we need is resilience of the new globalized finance and globalized economy, which is a machine to produce wealth, but is too fragile and too prone to ups and downs, booms and busts, excessive fluctuations and volatility. So I think we have to be all responsible when we find out the appropriate response on the short term, and also with a view of the exit strategy, to care for the system itself and not to be too depending on reconcentration on your own domestic preoccupation, which are legitimate. But we have to convince our own people, if I may, that there is also in the interest of the nation, a superior interest which has to be defended. And I agree that it is, of course, quite a challenge. But if I may, on this resilience of the global economy or global finance, while echoing very much what was said by Giulio Tremonti, I would sum up, seen in our own perspective, the three big avenues that we see as being absolutely decisive, which are transparency, much more transparency, as again you said, Prime Minister, in all domains, financial instruments, markets and financial institutions. We see a necessity, an absolute necessity, I think I echo very much what Giulio said, to combat the tendency to short-termism, which is very much responsible of this fragility of the system that we see, and pro-cyclicality also, and also to fight against pro-cyclicality by all means, because a lot of what we have ourselves worked out, like prudentials, like accounting rules and so forth, are themselves pro-cyclical, so are augmenting the fluctuations and the ups and downs. So these are major avenues that it seems to me where we are seeing an emerging consensus, at least to the extent I am informed on the preparation of these future meetings, G8 or the G20. And let me also say that I would very much insist myself on the necessity for the surveillance, the peer surveillance, but also the institutional surveillance of the macro policies of the countries that have an influence, and we know that many countries have a big influence now on the global economy. But that is absolutely necessary, because if we solve all problems of the financial sphere, but we continue to have very big domestic and external imbalances, plus and minus, then we will be back to square one. And the system will remain fragile, which is not acceptable. So there the IMF has a role to play.
Thank you. Just adding to what Mr. Trichet just said, I think it's very important to notice that there is almost no discrepancy between the recommendation from the public sectors and the private sector. So in that sense, I think we can be quite optimistic that the implementation this time will be much speedier. Now, let me open the floor for questions from the audience. Yes, please, go ahead. Can we have a micro somewhere in the middle there? I think you're... Thank you.
Thank you. I'm Charles Grant from the Centre for European Reform, a think tank. I have a question particularly aimed at Mr. Trichet and Mr. Tremonti. Nobody's talked about the euro yet. The think tank I work for is very pro-euro, but if you talk to people in currency markets, they have real doubts about Greece's ability to stay in the euro, and some doubts about Italy's, and that is reflected in the spread of their government's debt over German bunds at the moment. The problems are twofold. Government finances are quite weak in those two countries, and they're also losing competitiveness, and they can't devalue to restore it. So my question is, can Mr. Tremonti assure us that his government will take the very difficult and painful reforms necessary to improve the competitiveness of the Italian economy? And my question for Mr. Trichet is he confident that the markets themselves can discipline the governments and push the governments to make the reforms that are necessary to ensure that those two countries stay in the euro?
Mr. Tremonti, would you like to say?
Thank you. Anyway, my first lesson coming from the crisis is it's important, the public debt, but it's also important, the private debt. And could be that the private debt is more dangerous than the public debt. I remember starting from 2001, inside the discussion, Eurogroup, ECOFIN, everything was focused on public debt. And I suffered a lot being Italian. Now our feeling is it's important, public debt, and we are trying to control, but it's important and dangerous also the private debt. So first lesson is if you are looking at the rating of a country, you must consolidate public and private debt. In these terms, our position is quite different. If you look at the map, I remember a lot of studies, the theory was if you are a country with strong reform, your growth is very fast. If you are not, without reforms, your growth is low and low and low. And an element was absent on that maps, and was private debt. A lot of growth in Europe was caused by excessive demand caused by excess of private debt or real estate or financial. Anyway, our growth is based on our economy is not, obviously we suffer, but we have a lot of enterprises. We have in Italy 4 million of value-added tax position. That means 4 million of small enterprises, of professional, independent workers. The Italian banking system it seems to be quite solid, and I understand the reason. They don't, with some exceptions, remarkable, they don't speak English. And no call center, quite primitive. And so we know we need reforms. Labor market was reformed, but we know not enough. And welfare, mainly the pension system, must be revised. This is our position.
You think an Italian lesson from the crisis is not to study English then? Jean-Claude.
Not to use computers.
That's a good recipe. Let me first say that I don't see at all the euro at stake. I respond to the question. And certainly not the solidity of the euro area at stake. What I see at stake is the judgment of the market at the present moment, with all the tensions that we have and are also themselves observed in many, many other segments of the markets, of course, on the sustainability, the long-term sustainability of the fiscal policies. And I'm not surprised, because we always said ourselves that we should not have a single message for all countries that are members of Europe. I'm speaking for the European Union itself and not only for the euro area, but again, utilize the room for maneuver that exists and nothing but the room of maneuver that exists, not only because of the spreads that you might have to pay to refinance your deficit or your debt, but also, and I think it's even more important, to convince your own people, your own household, your own economic agents that they can have confidence in the long-term sustainability of your policy. And that is, of course, absolutely of the essence, because confidence, and I think we all agree on that, is absolutely of the essence in the present situation. But I'm confident that the various executive branches that implicitly you alluded to are getting the message. And I'm fully confident on their capacity to get the message.
There's a question over here. And then over there.
Ricardo Hausmann from Harvard University. The financial crisis has implied a pretty drastic sudden stop of capital inflows into all emerging markets, and it tends to hit more severely those that have a large current account deficit. Now, there are quite a few countries in Eastern Europe that have very large current account deficits. They are pegged to the euro. They're not in the euro. They were planning to join the euro, say, around 2012, and that by then they would have all their Maastricht criteria and so on. And now they're under tremendous pressure. We have Latvia and Hungary going to the IMF with extremely draconian packages. The Latvian program has a cut in projected fiscal deficits of 7% of GDP, 25% reductions in public sector wages, and so on and so forth. So, do you think that those kinds of adjustments are going to be sustainable, either economically, financially, or politically? Or do you think that in order to maintain the stability of the European area, you will have to revise the volume of intergovernmental fiscal transfers or the Maastricht criteria?
Who would like to play?
Maybe you can start.
I take your point. A number of countries have had an incredibly rapid development after they abandoned the centralized economy system and decided to go through the market economy decentralized structure. And my neighbor knows better than anybody that in the case of the Baltic states, the rapidity of the development has been absolutely tremendous. The fact that you have a correction at a certain moment, when you put that in perspective since the start of their extraordinary development, is not necessarily something which is totally aberrant. I mean, you can see that it's, again, after, in some cases, two figures growth in a large number of indicators, that you take a little time to reabsorb all that is not aberrant. For the country that you have mentioned, there has been efforts which were made by Europe, which were made by the international community, not only the European community, by some governments, and it seems to me that we have the ingredients that are necessary for precisely coping with the present situation. But it's true that each government has its own responsibility, its own long-term strategy, and again, they are put in a situation where the environment is very demanding. We try to do all what we can, and I have to say that precisely in the case that you have been mentioning, there has been a very rapid set of decisions taken by the institutions concerned.
I just want to highlight, but because it's interesting, the two questions. In fact, we have mentioned countries that are not in the euro area. They are in the European Union, but not in the euro area. But we could also speak about countries that are in Europe, and they are not in the European Union. The case of Ukraine comes to my mind, and others. So, in fact, we can say that from this crisis, it's clear that euro has acted as a very important shield, protective for the European Union countries that are members of the euro. Just compare for a minute Ireland with Iceland. It's interesting to compare Ireland with Iceland. So two relatively small economies, but the difference was, among others, that Ireland was a member of the euro area, so a country that respected currency, and in fact Iceland that in fact was considering informally the possibilities of joining the euro. We have told the Iceland authorities that it was impossible to be a member of the euro before being member of the European Union. In fact, that did not have the same kind of help, for instance, from the European Central Bank, the massive injections of liquidity coming from the European Central Bank. So I'm saying that because I do not agree with the idea that the euro now is at risk at all. On the contrary, what we have now is more countries wishing to join the euro, countries that have benefited from an opt-out, that are considering joining the euro, like Denmark. The countries that are in the European Union that are now thinking about anticipating their coming to the euro area. Of course, they have to fulfill the criteria to join. At least from the European Commission, we are not thinking about making any proposal for a revision of the criteria, of the Maastricht criteria, not at all. And I think the European Central Bank has exactly the same position. So I want to underline this point, that it has been very successful, the euro, for the countries of the euro area. And just think one moment, what will be the position? Because we have to think always about alternatives. How will be the situation in Europe now if the different France and Germany and Italy and Spain and Ireland and all the others trying to manage exchange rates and the instability coming from that? So let's be frank about it. The euro has been something that has helped the euro area countries very much, and I think it has been an anchor of stability, and it is important that we count with this stability in the euro area, and hopefully also in the future with still more countries members of the euro area.
Thank you. There was one question. Yeah.
Yes, a very simple question for Mr. Trichet. I am Patrick Sayer, CEO of Eurozone, a French investment company. The latest data seems to indicate that November and December have been very bad months for business trading. We don't know yet about January. There seems to be a real credit crunch. There was a little discussion initiated by Chairman Ackermann about the capital ratios. Will there be or will not be a softening of the capital adequacy ratios concerted between the ECB and the Bank of England?
The capital adequacy ratio are discussed at the level of the world in the Basel Committee, and they are implemented by the various participants at a global level. And in Europe, they are implemented through European directives. So it's not a question of negotiating bilaterally with between two central banks. And on top of that, it's done by those who have the responsibility of banking surveillance. So we are in a decision-making process which is very clear. I said already that it was the sentiment of those who are active in this and have a responsibility in this area to consider very, very important to pass the message that as far as the authorities are concerned, they are not in line with the idea that we should now augment the capital requirements. That's absolutely clear. And we know that there is part of the market which is calling for that and is acting as if they were strongly requiring that. And you know that, of course, all the bankers know that. It is not our position, and we do all what we can to pass the message that we are not in agreement with that. That would augment the procyclicality of the present period, and we do all what we can to diminish procyclicality. So in that sense, of course, I'm very much in agreement with the message.
Well, I have to be now fair. Is there a question somewhere in... No? Okay, so go ahead. Otherwise, we are taking the question from the first row. But go ahead. Can we have a micro here?
Jimmy Kamen of Kombursovik, Bulgaria. President Barroso, there are some new countries and founding countries in Europe that are not so transparent, often quoted to be not so transparent. Do you see any practicality how they fare in the crisis today?
Most of them, they have not so sophisticated, innovative financial systems. Not to say Romania, Bulgaria, Greece, even Italy, they don't use computers in English. Does anything like this, or just pure speculation in the world going on these days? Because they fare quite well in the crisis now.
Which kind?
Relatively well. But they're very stable. Romania, Bulgaria, even Italy. With their problems, of course.
Look, in Europe we have 27 countries. I think it was indeed a very important performance of the European Union that we were able to take decisions in a common framework for the banks, the recapitalization of banks, the guarantees, that we were able to adopt a European economic recovery plan, that we were able to take a common position to the G20. What the Prime Minister of Sweden said is very important. It is important that we have a coordinated approach, not only for the big member states, but all. And that's why we need strong institutions that represent all the European Union member states, big or small, rich or poor, founding members of or new member states of the European Union. We have 27 countries in Europe, and so it's important to deal with this diversity. So I'm not now making any kind of difference between new or old member states. Each situation is a new situation. I think generalizations are very dangerous in Europe. Sometimes people speak about North and South European countries. I really believe most of those generalizations come from cultural prejudices. We have to look at each country in itself. Some of the new member states are in relatively good shape, others are not in so good shape from an economic and financial point of view. Some of the old member states in Europe are doing relatively well, some are indeed with very, very severe problems, indeed in the recession as well. So we cannot make this kind of generalization. What we need is to look at each situation in itself, in its own merits, and to try to have as much as possible a common framework where we deal as much as possible in a coordinated, strategic way with these different problems. It's true that some of new member states are with higher growth, but their potential growth is even, of course, bigger than the countries that are much more developed. But some of the new member states are also facing problems in terms of their financial stability, as we know. So let's avoid generalizations that sometimes are very dangerous.
Thank you. The moderator, unfortunately, we cannot take any other questions. The moderator is always asked to synthesize at the end. Let me say three things. First, and it's very important for all those, in my view, who are less familiar with Europe. The euro, as President Barroso and Jean-Claude Trichet said, has been very important, very instrumental in coping with the challenges of the crisis. Secondly, I think the European institutions, although we have heard that we can still do better in the future, but have absolutely functioned, and I think Europe has reacted very well in these difficult times. And the last point, this has all been done by these four gentlemen and some others who have done a fantastic job in dealing with the crisis, but also today's at the panel. So you deserve a big hand. Thanks a lot.
Thank you.